Welcome to The Business. I'm Catherine Robinson. Coming up on the program, finding the way forward quickly and safely. Business calls for clarity on the government's four-step plan.
A lot of people I speak to are fairly done with the whole COVID situation at the moment and want a clear pathway out.
And super rip-off. Australians spend more on superannuation fees and charges than they do on electricity.
Knowing that the money that's meant to be going towards your retirement is now non-existent because of fees that you didn't know existed really sucked.
The nation's business leaders are calling for more clarity over Scott Morrison's four-step plan out of the pandemic announced on Friday. The deal struck at National Cabinet maps the path back to normality, but the business community warns any vaccine thresholds must be achievable and realistic. I was joined earlier today by former Wesfarmers Chief Executive and current Chair of Qantas, Richard Goyder. Richard Goyder, welcome to The Business.
Nice to be with you, Catherine.
What do you make of this four-step plan? Is it a clear pathway out? Is it the right approach?
Well, I think the response has been, gee, this is what we need. We need a pathway out of COVID. And the initial response on Friday, I think, was very positive. I think subsequently people have said, well, now let's put some parameters around it. Let's put some milestones so that we know what the timing is going to be, because I think, you know, a lot of people I speak to are fairly done with the whole COVID situation at the moment and want a clear pathway out, more than just what it looks like on paper, what it actually looks like in reality and a time frame around it.
Well, it has been criticised by some business leaders as too vague, no concrete timetable, no firm targets. How do you think the target should be set, and what's a realistic target and time frame? Well,
we think on targets, Catherine, that obviously it's linked to vaccinations, which the Prime Minister said, and we need clarity around that. The view from Qantas is that once people have had an opportunity to be vaccinated, that should be at the stage of when things open up and travel restrictions are removed. And of course that's reliant on the vaccines we get, the quantity of vaccine we get into the country, and also those that are prepared to take up the AstraZeneca vaccine in the meantime. And then there's other things that we need to look at in terms, obviously, of what's happening offshore.
So on a time frame issue, when do you think lockdowns should end and when should borders reopen? The
state lockdowns are really challenging, and they're challenging for a lot of people, Catherine, in terms, again, Qantas, you can imagine over the last few weeks the changes we've had to do in terms of our scheduling and timetabling, and it affects people's plans, obviously our customers, but also affects our employees who have been now living with the uncertainty of COVID for nearly 18 months. And it also applies, with one of my other hats, the AFL, we're still looking to see how we schedule the games this weekend because of different rules in different states. So the sooner that happens, that we get a uniform approach to what happens with state borders, the better. And, the sooner we can get to a situation where we're dealing with micro cases rather than just very, a sledgehammer approach, the better as well, I think.
Richard, you mentioned that uniform approach there. Do you expect the premiers and chief ministers to respect the targets once they're announced and work together? And if they don't act in the national interest, how significantly could that derail our emergence from COVID?
Well, Catherine, I hope that we have that unity of national purpose that we would want in a national cabinet, and therefore the premiers and chief ministers and indeed the federal government honour the sort of commitments that we hope will be made in the coming weeks. And as I said earlier, I think there's a lot of people who are now saying, gee, look at last night I watched the Tour de France and the Formula One Grand Prix, and you see that other countries are now opening up, and people are saying, well, we want that same freedom. So, I think we've moved from protecting now to how do we safely open up in a way that lets the economy start moving across all areas, tourism, education, as well as resources which have been strong. But also how we let people get on with some freedom in their lives, which I think Australians really, really value. And so hopefully the political our political leaders get that message strongly from not just business but from the community more generally.
You mentioned obviously this pathway out relies heavily on the vaccine rollout. Should business be involved in that part of our emergence from COVID, and does it have a role to play in vaccine hesitancy?
Well, I think business would be prepared to step up. I know in all the places I'm associated with, and indeed have been associated with, that people have the opportunity to have flu vaccinations every year. So business is capable, obviously, of messaging to its staff and bringing people together to do this vaccination. Qantas, of course, is looking at a recognition program for people who have been vaccinated, which I think will actually be quite an exciting initiative, and I think business can also look at what it can do to recognise people who have been vaccinated. So I think there's a lot business can do to help, and the business is good at that, Catherine. Business is good at working with government, working with the medical authorities to get this to happen as quickly as we possibly can, which I think is in everyone's best interest and what the vast majority of the population wants.
Richard, you mentioned we now are at a point where we need to live with this virus. So what would you say is the missing ingredient for businesses right now? What do they need to move ahead?
Well, businesses, Catherine, love certainty. So the 4-point plan now needs the metrics, which I think the Prime Minister talked about on Friday, needs the metrics around it. What takes us from phase 1 to 2 and then 3 and 4, and how can we be ambitious about that? How can we ensure it happens, as quickly as it possibly can, safely, obviously, for people, but with the appropriate balance of risks as well.
Richard Goyder, great to talk to you. Thank you for joining us on The Business.
Thanks, Catherine.
Well, it's a new financial year and time for Australians to check on the growth of their retirement savings. But many will be unaware that every year we spend more on superannuation fees than we do on electricity. While government reforms aims to bring down fees and charges, more changes are on the way to help boost our future nest eggs. Nasim Kadem reports.
Like many young Australians, Molly Kane hasn't paid much attention to her superannuation. She's had several casual jobs and with them 5 super accounts. She says every cent that went into them got eaten away by fees.
Knowing that the money that's meant to be going towards your retirement is now non-existent because of fees that you didn't know existed, it's really sucked.
Australians spend more than $30 billion in superannuation fees every year. That's more than what we spend on electricity bills.
No one wants to be taken advantage of, and unfortunately at the moment people are being charged really high fees for pretty poor outcomes in some accounts.
If you've got $100,000 in just one superannuation fund and the fee is 1%, that's not a one-off $1,000 payment. As your account balance grows, so do your fees. After 10 years, assuming your balance has increased to over $200,000, you'll have paid more than $17,000 in fees.
Each year it's probably a good time to check in. Maybe around tax time is a good time to do it. See what you're paying, where your superannuation is, what types of returns it's delivering over the long term.
For higher returns, the performance of the super fund also matters.
It's just over a year since the worst of the COVID financial crisis hit. The stock market has pretty much been riding the crest of a wave for the last 12, 13 months. So over the last year, super funds are now sitting on average returns of almost 20%.
The government's latest laws allow Australians to compare the performance of some superannuation funds. Its next step will be collecting data that allows people to compare fees and performance across all superannuation funds.
Superannuation funds have been put on notice that underperforming funds are not welcome in the system and that high fees can no longer be hidden.
The government's changes also prevent people from being pushed into a new fund every time they start a new job.
Getting rid of those duplicate accounts that proliferate throughout the system, getting rid of 2 sets of fees, 2 sets of insurances, and sometimes even more.
As more funds are put to the test, it's possible that some will fail and exit, while others merge and become more competitive.
If you look out over the next 5 to 10 years, I certainly think you'll see more consolidation in the superannuation industry. And the reason for that is that scale matters.
Molly has now consolidated all her super accounts into one low-fee fund, but she says Australians have the power to change their fund anytime if it's not delivering.
Look at your account. Are you losing anything in fees? Is your money growing? Is it shrinking? Don't be afraid to change super accounts.
More Australians like Molly are taking control of their money as competition in the $3 trillion super industry ramps up.
And you can find out more about Australia's top performing super funds and those with the lowest fees on our website. That's abc.net.au. To markets now, and an unsolicited takeover offer for Sydney Airport drove shares 34% higher today. Not enough to drive the broader market though. The All Ordinaries and ASX 200 ending flat for the day, and the Aussie dollar is buying just over 75 US cents. Fiona Clark from Merrick's Capital joined me after the market closed. Fiona, Sydney Airport shares jumped today after news of a takeover bid. What are the details?
Yeah, well, for a quiet day, it was some pretty big news, a $22.3 billion takeover offer for Sydney Airport from a consortium of infrastructure-related companies, including IFM Investors, Q Super and Global Infrastructure Managers. So the takeover offer is at $8.25, which is a very big 42% premium to the closing price on Friday. The shares didn't close quite that high. They did hit a high of $8.04 today, but closed at $7.78, suggesting that investors are not hopeful that that bid will go through. Management said that it's assessing the bid, but pointed out that we are in the midst of a global pandemic, which is affecting passenger numbers. International passengers, for example, were down 93% in May, and also pointing out that the share price was trading above $9 before the pandemic hit in 2019. So a pretty big reaction, a positive reaction, but still no word as to whether or not that deal will actually go through.
OK, and Tabcorp also announced a demerger plan. How did the market receive that?
Well, the market didn't receive that particularly well. The shares were down about 4.4%. So this is the demerger of the Keno and Lotteries business from the wagering and gaming business. You know, the business flagged the usual benefits from demerging, including more focused management, a more productive capital structure, ability to take advantage of any merger and acquisition activities, a re-rating of the business potentially, and of course the fact that there might be a different investor profile, ESG requirements, etc. But of course the bad news is that there's additional costs. So the company flagging that the upfront costs will be between $225 and $275 million, and ongoing there'll be $45 to $45 million of additional ongoing costs per annum. So market not responding particularly well to those additional costs.
Well, staying with company news, Crown flagged a lockdown hit. Just how bad could it be for the company?
Yeah, so COVID has affected Crown not only because of the closure of the properties, but when operating, restrictions in terms of capacity and social distancing are having a big impact. The company said that the theoretical earnings or EBITDA are likely to be between $240 to $50 million, which is less than half of what they were last year, and including the costs of closing the businesses between $90 and $100 million. So there's some big falls, and from a statutory perspective, the company is expecting to have a loss. Ongoing, also talking these conditions that continue to weigh on earnings, and there are a number of other things that are weighing on the company, including its review of its operations, its major customer relationships, its regulatory processes, etc. So not particularly good news, but the share price held up pretty well, just down over 1% today.
ABS stats were out today. Retail sales really surprised on the upside.
Yeah, so the actual number came in at 0.4%. The preliminary number was only 0.1%. So the major reason for that difference, or that upgrade, was an upgrade in the performance of personal clothing and footwear, which came in flat compared to minus 1.5% previously. In terms of states, the Victorian experience was the biggest upgrade, from minus 1.5 to only minus 0.9.
Fiona Clark, thanks for joining us.
Thanks, Kath.
And that's all from The Business. For more on those stories, head to the ABC News website and click on the business page. And you can always catch up with the program anytime on iView. I'm Catherine Robinson. Thanks for your company. Good night.